Good day everyone, hope you're well. Welcome back to my channel. Please don't forget to go like and subscribe. It will help the channel out a lot. Today we're just going to go into a in-depth video of how I look at the boom and crash markets, just to show you what I'm looking for before I take an entry. You will notice I'm not going onto the 1 minute with a bunch of indicators. The charts are nice and clean. I'm only using pure market structure. Okay, so today I'm just going to show you what I look for, what needs to happen, and why do I take an entry, why wouldn't I take an entry. I'm not going to draw it out as we go. I want to make this video nice and short. I'm just going to show you guys how I do it. As you can see, I already annotated the chart, but I will go step by step through with you guys as well. So as you can see, there was a big impulse move in this leg that left a fair value gap. Now price is doing what it does, all right? Now, okay, price came here, it started working up. So now, because this big fair value gap is left there at the top, we know it needs to come fill that fair value gap. So what's good indication for me of this price leg moving up is there's liquidity, and liquidity just before we are going to enter the fair value gap, and that gives me confirmation that price will react from the fair value gap. Now as you can see, this is the closest liquidity to the fair value gap. We tapped into the fair value gap. We got a market structure shift, big impulse move down. Now we can draw our order block. Again, liquidity just beneath the order block. Enter the order block. Big move down again. Market structure shift. Price left a fair value gap just here. Alright, we're moving up. Liquidity. We're moving up. It's not tapped here. Yeah, there we go. Got tapped into the fair value gap. Priced, moved down again. So let's start here before we move on. Okay, so let's quickly recap. We got the fair value gap. Price came back up. Took out liquidity, entered the fair value gap. Alright, now let's go to the lower time frame. We're currently on the 30 minute. Let's go to the 15 minute and I can show you how you could have gotten the entry just there. So let's go down to the 15 minute. So as you can see, there's that big fair value gap on the 30 minute. Price went down, it came up, touched the fair value gap, entered the fair value gap. Now look what happens. Took out liquidity, market structure shift, because price broke it with that wick. It broke that candle there, the low of that candle there. We got an order block. You could have gotten your entry there. There, price goes. Alright, so that's how you could have got the entry on that 30 minute fair value gap. Alright, let's go back to the 30 minute. Okay, cool. So let's have a look. So we entered there. Price came down again. It left a huge impulse move after liquidity was taken. We got our order block here inside a fair value gap. Price comes in. Liquidity formed, tapped into the order block and fair value gap. Price went down. So let's go to the lower time frame again to see where we got our entry. Yeah. Cool. As you can see, there's that order block and fair value gap on the 30 minute. Price came up, liquidity entered the area, liquidity was taken. We got our market structure shift there. And where do we enter on the lower time frame? On a fair value gap right there. And there's your entry. Cool. Let's go back to the 30 minute. Alright, so we entered there. Price went down. What did the market leave? A big fair value gap and an order block above it. price entered our fair value gap and order block area. Cool. Let's go to the lower time frame and see how we got in our entry here. Alright, here's the lower time frame. There's that order block and fair value gap. Price came down, entered the area. Now look what happened again. And guys, this repeats every single time. Most of the time this repeats. Yes, you do get trades that goes against you, but as you can see, if you only follow market structure, the win rate is really high. Awesome. So there we got a high, liquidity was taken there, price came down, we got a market structure shift there when that low was taken out. And where do we enter? Enter on a fair value gap there. You've got your entry there, price went down. Cool. Let's go to the next one. Okay, so we got our entry there, price came down. Again, we got liquidity lying here. So on that impulse move, we created a big order block here. Liquidity, haven't touched yet. Liquidity form equal highs, as you can see. So that's a good indication for me that price needs to tap in there because there's relative equal highs formed just there. Price tapped in, came down, but look what's happening here. We got 1, 2, 3, 4 touches. So this is equal lows. So we know liquidity needs to be taken. Liquidity price needs to come down. So liquidity formed, price tapped in. Haven't got an entry on this impulse leg, but it created an impulse leg. Now we are in the area of the order block and the fair value gap. Now you literally take it from this order block and fair value gap, and there's your initial entry, targeting the liquidity that's beneath here. Let me just delete that one. Alright, now we entered from the order block, the fair value gap, price came down. It left another order block here, as you can see. Now we follow the exact same steps. Liquidity, liquidity just beneath the order block, price tapped into the order block with a big impulse move down. We got a market structure shift, a market structure shift here. And what is left behind? An order block. Put your sell limit on. There you go, you go down. Okay, let's move on. Okay, so I don't trade markets that is looking like this the whole time because there's no big impulse moves. I don't trade, yes, there's big impulse moves on the upside, but I don't trade buys on the crash market, for example. I don't trade sells on the bull market. So yeah, I won't trade because there's no really nice price action. Going to the upside, still choppy. Again, big impulse move here. Here we created equal highs. It's still really choppy. I won't trade. Now we can see equal highs has been taken out. Still no impulse move for me to take a trade. Here's my first big impulse move from here till here that breaks market structure. Alright, there's an order block there, the last order block that took this market structure. Liquidity has been taken here, so now we know we can start looking for sells again. Now I won't take a trade from here. You can, if you are a riskier trader, you can take it from this order block and get that impulse move. I will wait, enter the order block, huge impulse move, and now it gives me my entry. What's left behind? A fair value gap. Fair value gap is left behind. Alright, price came down, went up again, entered the fair value gap, didn't give me an entry signal. Like again, you can enter from here and you can target these lows. It's a beautiful trade, but I will need more confirmation on my side. So fair value gap entered, second impulse move, and what's left behind is liquidity is left behind. So we already entered that fair value gap. Price left another order block here, the one that started this big impulse move. Liquidity is here, enter the order block in your trade, and you target the next low here, the next level of liquidity. In this case, it's going to be the break of structure, and it comes down. All right, let's see what happens here. Entered, broke structure, big impulse move here, left an order block. It was consolidating, broke another low, consolidating, broke another low. It took liquidity, but now look close what happens. Look really close what's happening now. It didn't touch my order block. Alright, so we got break of structure slash liquidity. The reason I did that is when price was playing out. Alright, cool, break of structure. I know there's equal highs here. There's an order block there, so I know price needs to come up. Okay, so now we can see this as a liquidity taken, a market structure shift that was happening here. Took liquidity, never entered our sell order block. It came down. Now it's reversed. Liquidity, enter from a order block, and now we can target our order block. But again, you can trade this if you want to, the opposite direction, but I will not take this trade. Even though it's a beautiful trade, I will not take it because it's against the crash, it's against the spikes. Okay, enter the order block, and there we go. Now everything is switched. So if you took a trade, for example, it took liquidity, it never touched there. Cool, we got our market structure shift, and you took a trade from example this order block that was left here. Yes, liquidity was taken, we got a market structure shift, price came back. If you didn't see this, price came back, you entered, you got stopped out. So it is going to take some time to get used to. You just need to go spend your time in front of the charts, learn market structure, how it works, and you can trade the boom and crash pairs as normal pairs. You don't have to catch one or two spikes. You don't. Like, I know that's like the holy grail of boom and crash. It's not. It's not. Everyone wants to catch one or two spikes, and then they're happy. And like catching one or two spikes on a 10 lot, yes, you can make money, but it's so risky. Rather learn your market structure. Instead of catching one spike that will be one candle, you can catch 10 more spikes, and you can target a whole price leg, not only one or two spikes. And then again, I don't trade in the ups to the upside, and yes, this is current price. So this is just my view of how I look at the markets on boom and crash. I hope this video was helpful. Rewind, pause, leave a comment if you have any questions. If you want me to do something specific, go a little bit more in detail, or this is detailed, but if you want me to break it even more down, like going to lower time frames and so forth. But this is my model that I look at on boom and crash, nothing else. Awesome, everyone. Hope you enjoyed this video. If you found it value, please go like and subscribe. It will really help the channel as well. Thank you so much. Cheers.